The Investing Project is about helping ordinary people achieve substantial wealth without upending their everyday lives. The Million Dollar Experiment is a real-time example of this project in action. And my foundational premise in leading this project is that I am not an expert in any of these topics. Rather, I'm building a system that weaves in other people's expertise and makes it possible for me, and you hopefully, to achieve tremendous results in a very short time. So remember, I'm not a financial advisor, so don't just blindly copy me. Instead, use this as a framework to integrate your own choice of experts that will help you achieve the results you want. Welcome to the week 19 update for the Million Dollar Experiment. We had a positive week this week, and I'll talk about it more when I jump into the details in the spreadsheet. Long story short, we made $171 in the trading. We wrote option contracts for $257 for the growth engine. No action at this point in the accumulation engine, and things are proceeding along according to schedule. So let's look at the numbers in some detail. First, we have the trading, and this was a busy week. And I've noticed that when the number of trades starts to rise, it's usually because it's a messy week. Good weeks, good trading weeks have one or maybe two trades in a day. When things start to get messy, I get a whole bunch of trades in here, and many of them don't work or don't work fully. And so that's what's happening here. We had 15 trades this week. 10 of them were wins, but 4 of them were losses, and not small ones in some cases, and 1 break even. I want to highlight something. I mentioned this in a video earlier this week, in particular with regard to the very first trade. Now, this was the first week of month 5, and we're now allowed to put on $450 worth of risk. And so the very first position I put on had 8 contracts, taking $400 worth of risk, and it turns out that it was a stop out, and I lost that $400. And the next day, and for the rest of the week, I think it rattled me enough that I said, wait a minute, I'm not that convinced these are great candidates. I'm going to put on smaller size. And you can see the amount of risk had dropped substantially that I was willing to put on, but they were wins. And the problem with this is not that this was smaller risk. Not that this was smaller risk than what I'm allowed. The problem is it's inconsistent. I took on more risk for the same quality of setup than I did for with the rest of the week. If I have A+ setups, I need to take the full amount of risk. Now, if these are not A+ setups, fair enough. But what I would say is this first setup on the MYM was not any better in quality than any of these other setups. In fact, some of these would have been better than the original one. And yet, I went in much smaller on the subsequent ones than I did on the first one. That is backwards. That is not what I should be doing. If they're A+ setups, I need to go in full size. If they're B setups, then go in at some smaller size, but be consistent. And for example, if I'm going to say on a second class B level setup, I'm going to go in at half the full risk, fair enough. But I have to be consistent with that across the board. And I wasn't. And I want to highlight this. If I had gone in full size on all of these, this set of numbers here is the multiplier that I would have. So let's say I was 1-to-1 for this one where I risked 400. But here, where I was risking only 114, I could have where I was risking only 220, I could have doubled that. And so if I did that, you would see that the $400 loss was the same because it was a 1-to-1 risk multiplier. But here, I would have doubled the loss. It would have been 228. That's not good, you might think, but wait for it. Look at the rest of these. The multipliers here, 1.5, then a whole bunch of 3s, and then a 6. With a $75 of risk, I must go in bigger, because bigger in terms of numbers of contracts, to put on an appropriate size of risk. If I had gone in with the appropriate risk-adjusted multiplier here, the return would have been substantially larger, as these all worked. Now, the same thing applies for losses. If I was 1.5 of the amount of risk on this loss, the loss would have been bigger, but the wins would have been bigger too, substantially. And when you work this out, even though all the losses would have been bigger had I gone in full size, all of the wins would have been so much bigger in aggregate that the total for the entire week would have been $1,706. We would have met our target for month 5 in the first week. Instead, what did we do? We did $171. It's like a fraction of what could have been and should have been. And even if I'd said, look, I don't think I should go in full size for any of these because they were only B setups, not A plus setups. And so I was going to go in half. Sure. But half of 1,706 is $853. That would still have been a very respectable week, not 171. If I'd gone in a quarter size because they were all C setups, let's say, and I'm only going to go in a quarter size, no problem. That's still a $426 week, not 171. So there's something to be learned here. And I'm lecturing myself a bit here because I need to make sure I don't forget this point for next week. I need to be sizing consistently as a function of the risk I put on relative to the quality of setup that I'm looking at. And so I have to remember that because otherwise I take on more risk up front and then I penalize myself in the rest of the week and I don't catch up properly. That's not the way to do things. So that's trading. So made $171 this week. Fair enough. On the investing side, on the growth engine side, this week is when I put on the first of so we were assigned shares on DRAM. I didn't want to put that trade on right away when DRAM had dropped dramatically. I waited until DRAM had a very strong up day, and then I put on a covered call with the $66 strike. Now, and I did that for a week and a half out, so July 31st. Now, I chose 66 because it looked like, because we were assigned at 60, so that's a 10% gain. If we were called away at 66, that would be a 10% gain in 2 weeks. That would be very attractive. However, as it happens, the DRAM and the entire market has sold off throughout the week, so it doesn't look very much like this will be triggered. And we collected $107 for doing that. I could have collected $107 at the $60 strike and had that expire today, this week, but I didn't. I decided to go for the larger win for next week, and so that may end up not having been the most optimal thing to do, but it seemed like a good idea at the time. In any case, we have $107 in cash, and if this expires worthless, we'll just write another one the following week and be able to capture some more covered call premium. We also put on 3 contracts of the SoFi 15 strike puts for August 21st. That brought in $150. So we have $257 worth of earnings for this month so far. Now, next week, actually the week following next, we'll have an opportunity to put on a little bit more for DRAM. I would expect that we could get another $100 or so. So quite likely we will get $350 some for this month in terms of the earnings. Now, what are we supposed to be getting for this month? If we go here and look at our totals, we can see that the expectation for us is that we will be generating at least $154 in income for the growth engine in month 5. So we're already past that. We're at, what did I say? Can't remember what I said. We're at 257 already. So we're well past that. We'll probably end up with 350 some by the end of the month. So we're more than double what we were supposed to be doing. So that's all good. With respect to the trading, our target is $1,470. We're at 171. I'm going to clean up the way I'm doing things, as I've already talked about. And so I expect that we'll have a better week next week. And with any luck, we may get close to our target. We'll see how that goes. And then, of course, if this is anything like the past months, we'll hit our target, we'll switch over to the alternate account, and we'll hit our target again, and then some. So hopefully we continue that pattern because that's a very healthy place to be. Anyway, that's where we stand at the moment. Now, what I'll do here is I'll just close this down for a second. Let's go and look at our dashboard. Always interesting to see what the charts look like when we're tracking. And right now we're tracking well. In fact, we're ahead of schedule, but I'm not counting this. I'm just looking at the raw basic expectation, and that's got us still on track to be growing at the rates shown there. Things are looking good for the $1 Million Experiment, and we'll continue to chug away here and keep you updated as things go.